Hey traders, Raghee here. Welcome to another episode, our Friday episode, Friday the 5th, non-farm payroll Friday, episode of Charts and Coffee. We should be good to go. All right, great to see everybody. All right, as always, we're going to take some questions, take a look at the markets, and see what we're dealing with as we begin the last trading day of this week. Of course, non-farm payroll came out at 8:30. For the most part, non-farm payroll is going to create a lot of volatility that could, just basically shake up the market a bit and set some ranges that we might see some issues with in terms of, once the bell rings, now you've got another group of participants that are now dealing with the ranges that were set just after 8:30. So it ends up creating a little bit of odd volatility, sometimes exhaustive volatility, depending upon how much movement we saw. So just be aware of that. I generally consider non-farm payroll Fridays a caution day because the market's digesting that jobs number. Now, quite frankly, that jobs number was probably a whole lot more important 6 months ago, 4 months ago. But since the Federal Reserve has absolutely still has the spigots open, low rates, plenty of printing, it's really not as impactful as it once was, but always keep an eye on it. So again, happy Friday, gang. And let's go ahead and tackle some questions we have here. All right, first of all, hey there, line watcher. Am I fading gaps? Oh, this morning's gap. Am I fading this morning's gap? So if I'm talking about gaps, I don't automatically fade anything, but I do want to know whether or not the environment is ripe for the fade. So I call it a dual confirmation gap. Some folks call it I think in market profile, they might call it a true gap. Here's the criteria. Are we opening higher above the close? And are we opening above the previous session's high? Now, you could look at the regular trading hour, the 9:30 to 4-ish range, or you could just look at the candle in its entirety. I usually look at the candle in its entirety. But yes, so I'll look for a potential fade. But I think a lot of traders misconstrue what that actually means. It doesn't mean that when the bell rings, I'm selling short. Not at all. I'm looking for ranges within the first 3 to 5 minutes. And for those ranges to be broken to confirm that there's a short sell tendency in that gap up. In other words, that's the fade. So great question. Thank you so much for that. All right, James, yes, Johnson & Johnson. Well, so no, James. Okay, so James is a part of our Sector Secrets crew. So good to see you here in Charts and Coffee, my friend. All right, so Johnson & Johnson, I know is actually something that you grabbed, and then what we did and I love that you asked the question, James, and I'll see you later on this morning in the Sector Secrets Mastery Room. So what we did, and this is pretty important in terms of understanding the way in which you can make trades affordable, get exposure to more names. Not necessarily pin the trade on a single stock. And what I did is I went with the XLV ETF for our buy, and Johnson & Johnson's very much a part of that narrative because of the weighting Johnson & Johnson has. Now, in terms of weighting, remember that if you're playing a heavily weighted stock like J&J within the XLV healthcare ETF, you're in many ways sort of tethered to the same narrative. And I think we are. But the cool thing about the XLV is the cost. And this is something that not all the members of Sector Secrets or just even in simpler trading are dealing with in an equal way. But for a lot of traders, finding affordably priced contracts to be able to trade. And I don't mean contracts that are going to trade and expire today, or contracts that could be traded and expire next Friday. But I mean contracts with some time so you could take advantage of the trend. For me, XLV is a really great way to take advantage of this narrative, which is a little bit more expensive to enter, and do so in a very, very budget-friendly way. And not only does the budget-friendly way allow for lower cost for smaller account traders, but also allows those with, say, medium to even larger accounts to scale in, right? And I mean, so yes, I like that we're catching a bid. I'm not surprised. Nice double green pullback. So great eye. So if we were going to go ahead and throw the, let's do this. If I want to throw the XLV in the double green to take a look at the structure of the XLV alongside Johnson & Johnson, yeah, you can even say, gosh, Rob, Johnson & Johnson looks even a little bit better than the XLV. So it does. But remember, I think they're going to be a boat and tide that moves up together. So love it. So, let me mention something. We played Pure Storage. And this is a trade that we took. And I'm not showing this because it took off, which, clearly is nice. But what I want to mention is that this is a stock that in terms of cost was very affordable for folks to take. This was $1.05 to $1.10 stock that was trading at $5. So one of the things that I love to do is sort of treasure hunt, right? I mean, I think we like to find those double greens and find the most affordable way to enter them without, and here's the key, without having to go with collecting credit, whether that's going purely with a put credit spread or whether that's, say, a call vertical. I don't need to multi-leg this thing to make it affordable. And you know what? I want to mention this because I think we just had this update go out in Countdown Trader, which is this conversation right here, right? If you haven't checked it out, this is very much the philosophy I have with my options trading, which is I don't mind a long call. I don't mind a long put. And then secondarily thinking about whether or not within the context of an uptrend, I may consider a put credit spread. In fact, the next issue, and if you want to check that out, we send it right to your inbox. You can check out countdowntrader.com. Is the next issue is going to be under what criteria and what's the approach that I use when I do want to go multi-leg, meaning a call vertical, leg into a call vertical, or put on a put credit spread. So yeah, thanks for the question. I like this for far more than what we've moved. Here's what I'd tell you, my friend. Look at this gap right here. I'd love to see this gap close. So I would take a look at this close. Actually, this open on, as you can see here, the 28th, and I'd keep an eye on that 168, 168.20 level. So yeah, really good stuff. And yeah, How I Made $2 Million in the Stock Market by Nicholas Darvis. Very cool read, very quick read. Like that book a lot. In fact, the Darvis 2.0, which you can see here on my chart. I've been using Darvis since a teenager. I used to do it manually. I used to call them breadcrumbs because you're looking for those minor highs and minor lows, which are literally like breadcrumbs of markets leaving. And yeah, big fan of that. So thanks so much. All right, next up is, gang, let's see what we got here. Yeah, the countdown. Of course, this is, I'm the countdown trader, right? Always counting down to an event, always counting down to a level. Yeah, I love that. Thanks, Tina. Yeah, the countdown's back. So, hey there, Jay. Very good morning to you as well. I'm short the NQs at 13,610. I'm anticipating a pullback of the, my candid thoughts. So, Jay, I appreciate that. My candid thoughts are this. I'm rooting for you. And I mean that sincerely and not in any patronizing way. I hope we get a pullback because a pullback is, one, going to be profitable for you, friend, and it's going to set up a trade for me. Now, having said that, within the context of a double green, I'm not even allowed by my rules, by my parameters, I'm not even allowed to short. I'm always looking for that checklist mindset. If it's double green, that double green check, literally in the box, means I cannot short. I'll be looking for relative outperformance to the upside. That said, could we see a pullback? We sure could. I mean, I'm not going to say that on a Friday after a pretty strong week, we may not see some profit taking, which would clearly serve you very well. And it would be an opportunity for me. It'd be a pitch across the plate from my style, which is after the pullback. I want to see the continuation. So where you sit and where I'd like to be is very much something I call sometimes the most bullish thing you can be is a short-term, near-term bear. So I'm rooting for you. I couldn't even begin to tell you, though, my friend, whether or not we're going to pull back, because I think that it's really contingent on whether or not the market wants to take some profits into the weekend, whether or not after punching up to this slightly higher high, traders might want to pull back a little bit. So I'm going to be straight up with you and tell you that A, I'm going to be, for the most part, long. B, like I said, I'm going to be rooting for you. And C, in terms of that exhaustive play, I don't see a lot of volume. You're probably going to want to see if you can find some volume that will allow you to take advantage of more downside, and maybe look at it a little bit more as a day trade. If we can hit some sort of volume exhaustion level and move lower. So that would actually lead me here, would actually lead me here. And I would treat this as a day trade. And maybe that is what you're looking at. I don't know the time frame. So, that's something that would clearly be something that would make a huge difference in the way that I'm giving you analysis. But if you're thinking about exhaustion, just be aware when we start moving down to about a 2.5 to 3 negative volume weighted average price Z score. That's what I call the V score. It's a standard deviation study of volume weighted average price. That might be a near-term support level. Okay. But right now, we see a little bit of weakness, 20 minutes or so before the open. So thank you for that question. Hey there, Paul. Paul asks, when I buy a stock and it rallies significantly but does not hit my profit target and turns around and heads lower through my entry price, do I still buy at my lower conservative level? Technically, if it has not hit the first target, it's still in what I call no man's land. Hasn't stopped me out, hasn't hit my target. So the simple answer, Paul, is yes. Yes, I'm okay with that. Now, the only exception to that would be if the market structure in that, as you said, heading lower changes the way in which the trade sits in the underlying environment. In other words, have we gone yellow? Has there been a significant move on certain kinds of news? If there's something that structurally shifted it, I might have to reconsider. But generally, the answer is yes, my friend. It's still going to be valid for me for entries because it's still in no man's land. It's still in that zone of anything can happen. Even being stopped out or still hitting that T1. Now, a lot of times I try to put out the optional targets as well. So sometimes there's going to be a terrific optional target opportunity where traders who are thinking, Rag, this has been a nice move. Maybe we need to reel this in a little bit, or at least be able to scale out of 25, 50% of the position, move to a break even. And that's where, again, I don't want to call that sort of a short funded account, small account, anyone who's got a lower risk tolerance as well. I don't want to call that necessarily geared towards that, but I think everyone should sort of imagine that they're trading a small account. They're going to make better choices. It kind of goes back to, by the way, that's a very that's a great question because conservative levels are more ideal for smaller accounts as well. But, I kind of think of that more choosy conservative level, imagining that you're trading a small account, go back to something Warren Buffett has said for decades, which is he says that, when you're a young adult, you should imagine that throughout your lifespan, you only get 20 investments, 20. That's all. You get to invest your money 20 times, 20 ideas. And he says, because you've limited what you can do, you will make far more prudent, well-researched, thoughtful choices. And I think that's also what a small account mentality is. More prudent, more conservative, more risk-aware, thoughtful choices. And gosh, I don't care if you're trading a $10,000 account or $1 million account. I've run the gamut in both. I still think, in many ways, risk first, even with a large 7-figure account. So I think that is really important. And I love the question. Yes, it's still going to be valid, but think about the structure, think about the risk, think about the cost. So love it. Next up, thank you, Paul. Let's see. Bish, what's my process? Look, when I have a trade, I will, especially on the future side, I'm going to have a stop loss. But on the option side, it's going to be a percentage of risk. I'll have a target out there. So the question is like, do I send out alerts or do I alert myself? Well, yeah, I mean, clearly the first setup alert is all about what prices do you want to buy that option, right? I always want to give you guys sometimes days of heads up, not, hey, I just bought this and good luck to you. I don't do that. I don't like to do that because I don't do that to myself. So what I would tell you is, yeah, you can wait for me to say I want to buy or sell something, but I'm already going to have given that to you in the setup alert. What I want you to do, even for your own alerts, ones that you've generated for yourself, place alerts on your platform. Absolutely. Because when you place alerts on your platform, you are allowing your platform to do probably the most powerful thing it can do, which is be your second set of eyes, your trading partner. Because I'll tell you what, I've been a retail trader managing my own capital, my family's capital as well, portfolios, for this will be the 34th year. Been developing these strategies for 3 decades. However, you don't need necessarily all that experience. You could borrow someone else's experience. Go, okay, Rog, you've gone through the process. Let me see the process and let me put alerts out there and sort of test out the waters with the way that you like to trade. And I think the best way to track that is with these alerts, so that when there's a level that I want to act at, your platform pings at you, says, hey, we're going to do something here. And then you can look at it. You can gauge the risk. You can gauge the cost, right? A lot of times traders who will look at the bid ask on a certain strike, when I'm interested in it, might say, you know what? That represents too much risk. I'll wait for something different. And those are the decisions that I hope that you're able to start making on your own, because that's how, your career is going to be. For me, that's how your career is going to be something where you learn from somebody else, but make it your own. So thank you for the question. George, Intel. Oh, you know what? I missed the question on, did I miss the question on another symbol? KBH, sorry, Joe. And then George, I will get to your question. So Joe asked KBH. All right, KB Homes. So if I'm going to look at, let's pull this up back on here we go, on the trading view. Okay, so double green on KBH. Now, the question you want to ask yourself also is, is where is KBH weighted in terms of ETFs? There are significant weightings. Here's what I'll tell you. Look at the volume, which is here to the right, okay? And look at where it starts to stack up. Look at where these peaks are. That's really going to be where I'd love to see KBH head down to, and we just got past dividend date. So when we're heading into dividend date, it's not unusual to see a rally maybe in front of it, although this was pulling back before that. I would tell you 21 exponential and the 34 EMA wave. And I like that we've got a little bit of volume here, right? And I don't know if you guys can see that really clearly. I think you can, but let me make this a little bit brighter because it's pretty darn important to me. Let me make this like a nice muted yellow or something. Oh, there we go. That might be a little obnoxious, but do you guys see what I'm talking about there? That's what I want you guys to be able to see, right? That zone right there, right? That zone right there could be really interesting in the wave. Yeah, I would really like that. I think that would be really an effective level to not only use a price-based support, but then you've got some volume, got some size there. So I do like that. Thank you for the question. And check out the broad, so that what I'll also mention, and this is a lot of what I do in Sector Secret. So let's say we take a look at KBH. Let me give you a little bit of insight. I will then do a reverse stock search, right, with the group and say, hey, where is KBH heavily weighted? Which ETFs have volume? And then we'll start to look at not only KBH, but we'll ask the question that precedes the trade. Is KBH the best example of a relative outperformer in that world that KBH exists in with many, many, many other stocks? And then if it rises to the top in that conversation, then I might not only realize KBH looks wonderful, but I might also realize that there are a number of other names that look good too. along with KBH, and then I could start to cherry pick, which is really, for me, watch list building. So thank you. Terrific question. Thank you, Joe. All right. Question here for Intel and Square. Sure. Intel is actually on my list for stocks to watch. Good structure on Intel. In terms of double green, a little jumpy, but we did close this gap here, which makes me a little bit. So if we had this gap hanging out there and a double green, I'm not so keen on that. But since we have the gap, double green, and we've closed that gap on the 27th of January, now I feel a whole lot better about A, having caught a bid when the market heads lower, and B, I have more faith in this overall uptrend. So I could look at Intel alongside SMH. I can look at Intel alongside QQQ. Do I like it? Yes. There are some other names that I like as well, AMAT being one of them. I like TSM. I like the SMH, generally speaking, as well. But I do like Intel for a pullback buy. And again, you're looking to see if there's three things I like in the zone: the wave, the 200 EMA, and a little bit of volume here. So that's pretty nice. I do like that. I do like that a lot. And that's actually the gap close zone being retested. A lot of reasons to technically like that narrative. Square's had a rough go, right? Why has Square had a rough go? Well, one, it was sort of losing some of its uptrend in early January. Square, for better or for worse, is not highly correlated, but there is a correlation to what's happening with Bitcoin and Square, right? So with that being said, if I'm looking at Square right now, am I bullish? Yes. The trend that preceded this chop in here, the trend that preceded the chop is going to tell me in that chop, look for oversold buys, not shorts, not fades of ceilings. And I also want to stay bullish. So I like it, but it's not ideal structure. So again, reverse search Square. Where is Square? What sectors? What weighting? What else is Square trading with that might have better relative outperformance? Is there an ETF that Square is heavily weighted in that I might choose in lieu of Square, but I have exposure to Square, maybe a lower cost basis and a little bit more, some other relative outperformers to sort of help Square along? Kind of like when James asked me about Johnson & Johnson, XLV was just a cost-effective way for a lot of traders to do it. And a lot of what I do, even for myself, last year before last, 2019, August, my husband came home to trade with me. Some of you might know the story. And we started him off with a $10,000 account. It's a cash account. He was only allowed to buy options, long call, long put, because then even though they're naked long positions, his risk is whatever he paid for the option. And we would max it out at a percentage of what was paid. So we knew as soon as we paid for a certain option, only X percent of that was really what we ideally were open to risking of it. And he had to trend follow. Now, if you go back and look at August of 2019 and the almost 90 days, it took him 80 days to double the account. But in that 90-day period, take a look at August 19. That's what he was trading through. And so it wasn't just a straight up market, which, let's face it, a lot of folks confuse an uptrend with smarts, or as one of my first mentors told me, and some of you might have heard me tell the story, but it still burns because it was so true and yet hurt. I had a great run in the markets, and my mentor said, "You did great." And he looked at me square in the eye and he said, "Kiddo, don't confuse an uptrend with brains." Ouch. But it's true. Uptrends are the gift that keeps on giving. That's why I always come back to, hey, gang, let's trade uptrends. Let's trade uptrends. Oh, by the way, I realized that it's 9:24. I tend to run a little longer on Fridays. My apologies. For those of you that head on over to one of our simpler rooms, simpler options, simpler futures, or one of the masteries, I will see you all on Monday. Those of you that want to hang out for a few more minutes, I'm happy to hang out and take some more questions, okay? But my futures folks, my mastery folks, I'll see you guys later on this morning, and I might even pop into the options room for a little bit today as well. All right, so let's take a few more questions. And my Dorothy, hey there, Dorothy. The watch list with the wave colors, is it available on TOS? Yes, you're talking about, well, I have it on, yeah, you're talking about this layout. We just got it for TradeStation. And yes, I do have a version for TOS. So I know you're in one of the rooms. So yeah, just hit me up and I'll give you the link. It's a custom watch list you have to set up. So it's going to take you a few minutes to do it. But any one of our tech sessions can help you out with it. But the instructions are quite good. I'm awful at setting up custom watch lists on TOS. It's not something I do often, but the instructions, even I was able to do it. So hit me up when you see me in one of the rooms and I'll give you the link. Okay. All right. Next up is T. Thank you very much. Yes, smash that like. I appreciate that. Hey, even more than that, smash the like, but go sign up for Countdown Trader because a lot of the concepts that I'm talking about here, gang, we discuss in Countdown Traders. That's countdowntrader.com. Okay. All right. Great question, Andrew. What if I cannot afford the long calls and still wanted to do the trade? So what I would do is start looking at one of the multi-leg alternatives, which is going to be the next issue, I believe, or at least this week or next week of Countdown, which is how do I do multi-leg strategies and why would I do multi-leg strategies? And that is, yes. I mean, the first thing, if it's in an uptrend, and if you want to give me the symbol, Andrew, that's cool. If you're looking at an uptrend and the overall direction is up, okay, if you're in an overall uptrend and the overall direction will be up, but if meaning the momentum is still there, I won't recommend legging in. A momentum strategy is not going to be conducive to affordability on the options level. However, let's say it's pulling back. You have two choices. You can leg into a call vertical. So there will be a brief period of time where you will have just that long call. You won't be able to offset it for maybe a couple days. It just depends on when we start launching out of that support zone. But remember, you're also going to have a percentage of risk where if we're just wrong, you're risking a very small part of the premium that you've paid. Alternatively, of course, you can collect a credit with a put credit spread. Same idea, same timing. So it is doable. And that's when the multi-leg strategies become really, really important. Okay. All right. Becky, that's super kind. No, I really appreciate that. No, it's super kind of you. Teresa, NEE is something that I do almost every NEE and actually Generac. It's something that I do almost every April, May, as we go into hurricane season here in South Florida. I call it my local knowledge required trade because it's my hurricane season trade. I look at NEE, which is the heaviest weighted stock in XLU. Why is that pertinent? Because NEE is going to more or less move where XLU allows it to. XLU utilities do not do typically well in a reflation environment. So if XLU is not going to move, NEE is going to have to buck the trend of utilities, which it does seem to be doing. So this goes back to that relative performance conversation. When people say, what about XLU? I'm going to say, go take a look at NEE. So I love where your head's at. That's absolutely how we want to look at that, where utilities may not do good in this increasing inflation, increasing growth environment. However, if you can find a stock within the XLU, and this is the heaviest weighted stock in the XLU, and it's looking better than the utilities ETF, there's your relative outperformance. And that's what I mean about this sort of selective sorting and sifting through ETFs, through the indices to find the underlying market trend, double green, that's going to be give you the best opportunity to take advantage of more upside. Okay. All right, gang. So with that in mind, let's see here. Yeah, I think, there's the bell. So with that in mind, I will see you all on Monday, 9 a.m., same time, right? Same time, same stations. Thanks always for being a part of our charts and coffee crew. Okay. Have a great weekend. Trade safely. I'll see you next time.